It is 12:33 p.m. Eastern Daylight Time, and we just want to take a real brief look at major developments in the markets today. We're going to look at a couple of indexes and also some underlying funds that drive a few ETFs. We're going to do this real briefly. Going to hit about 4 or 5, maybe 6 things real quick. So freechartvideos.com. Please, people, go to the website, look around, visit around. I've got a lot of stuff there. I'm doing this for free. It all is dependent upon traffic at the website. And as long as I can get enough traffic to where I feel like it's justified through the sponsorships and everything involved there, then I keep doing it for free. So please do that. And this video is for educational purposes only and is not intended to be any form of investment advice. And you know that because you're grown-ups. I'm not a licensed professional. I'm just a guy that draws lines on charts. Let's take a look. Here's the Dow Jones Industrials. And for those who were thinking that that we were going to see a double top here at this blue line, and that boy, I tell you what, we go up and then we crash and then we come up again and we're just going to head right back down and end up, 5, 6,000, 4,000 on the Dow. Well, the Dow had another idea, and I've been telling you in my chart analysis of the Dow all along that there is a target, a minimum target of about 12,000 in the Dow Jones Industrials. Today, we had a strong and clear breakout above this blue line that is a horizontal line drawn from the top of the April peak. So the Dow is now at a new yearly high. As a matter of fact, it would be at a new multi-year high, and it's looking strong all day long. Let's move on to the next thing. Here's the S&P 500. I've got this teal line. That is the line that is set at the April highs, actually a late April high. We have not pierced that in the S&P. I think we will. I can't tell you exactly when, but there are two patterns. One of which is this inverted head and shoulders right here that points to between 1240 and 1250, with a little bit closer target towards 1250. I believe that's going to hit, and it's going to take out this line in the process. So right now, the reason the S&P has been lagging somewhat, I think, is due to the financial stocks in the banks. So if you look at, however, if you look at the IYF or the Riffin, and we're going to look at the Riffin in just a second, I think you'll see that the banks are just now starting to come on board. The banks are just breaking out of their bottom pattern, and it's a double bottom, and it's going to really push the S&P higher. Let's take a look at that next. Okay, here's IYF, the financial index. You can see that there has been a line of resistance that was briefly broken back in the middle of October, but that line has been running June, July, August, September, October for greater than 5 months. And it's a pretty clear double bottom pattern to me. Or you could say that this is kind of a complex head and shoulders with 2 left shoulders, 2 heads, and then shallower right shoulders. I could go with that. But where does that point to? By the way, this line down here is the neckline from a very large inverted head and shoulders in the IYF that bottomed on 3/9/2009. So you see we came down for 2 tests of that neckline, solid support both times, and now it appears today that this is the breakout day over this line. And if we measure the depth of this head, that puts the IYF just under 61 as a minimum target. I said we're going to look at Riffin. Let's do Riffin next. And here's the Riffin, the Russell Financial Index. This is what the FAS and FAS are based upon. And again, if we draw, we got the same pattern here because it's the banks. If we look at the Riffin and we want to get a target from this, we get a target just shy of 900 in the Riffin. So be looking for that as a minimum target. And folks, there's a really large inverted head and shoulders in the Riffin. And if you want to get a little nuts and look at this, and this neckline being straight, guys, the depth of that pattern, because there's two. There's this smaller head and shoulders here that I was calling back in spring of 2009 with a target of 900. I think I had a target of a little over 800 based upon this small pattern before we ever made and completed the large one. And when it became clear that we were in a larger head and shoulders pattern, guys, this pattern has a ways to run. So I'm not saying that necessarily that it's going to happen soon, but I believe we're in a bull market, and 2 or 3 years down the road, we're going to come back to the Riffin, and we're going to see it over 1,000. I think over 1,100. So anyway, look at that, and we're going to look at one more thing. Looking at the Qs, you can see, again, an inverse head and shoulder pattern, a breakout, never really pulled back as far as one might expect before the Qs took off. And I want you to see something. You notice how I will talk about this is the minimum expected move. You can see that the Qs have gapped up over that minimum expected move. And it's my guess at this point, now some people might say, yeah, well that means it's a blow off top. Well, it could pull back. I'm not saying that, but if you back off to a daily chart, or let's even do more, let's back off to a 2-day chart. You can see that there's a pretty well-defined parallel channel here between this line and this line. And here's the double bottom, the second part of the double bottom that the Q's made. I'm thinking there's probably a pretty good shot that we get into the high 50s where we will test this line, which is very, very long term. It just has a few data points that make it, and frankly the markets may have forgotten why this line would even be there, but it's possible that there's resistance here. But the next spot where I would really expect something turning back would be if we hit this upper line on the top of the channel. So anyway, that's just some things to look at. You can see how strong everything is today, and again, those who are thinking double top, no, it's booking right on up there. So I hope you're on the right side of the markets today. Bears, you shouldn't be there. You shouldn't be there. I know you can find MACD and stochastics, and you can find justification in selecting your indicators to fit your sentiment, but the chart pattern does not lie. This is a bull market. It's going higher. And I want you to keep up with that by visiting freechartvideos.com and seeing all of the information we've got. I'm thinking about putting together a kind of a primer or primer, however you might call it, on some of these chart patterns. I'm also going to do a video later today on why I think volume can no longer be trusted in the indexes and even in individual stocks. It used to be volume would tell you volumes of information. Nowadays, I don't think that's the case anymore, and I'm going to post that later this afternoon. Y'all take care.